Let's say one morning, Elon Musk woke up and said, "All right, that's enough." He sold his shares, converted his assets to cash, and withdrew from the market entirely. Out of Tesla, out of SpaceX, out of X. Everything. Total wealth, approximately $800 billion. All cash, all on the sidelines. So my first question to you is this just one man's decision? The answer is somewhere between no and absolutely not. Because Elon Musk is not an ordinary wealthy person. He is someone embedded into the economic balance of multiple companies, multiple sectors, and multiple countries. Pulling him out of the market is like removing a gear and expecting the machine to keep running. Maybe it works. Maybe. On the first day, Tesla shares drop. That's certain. Because Musk isn't just a CEO for Tesla, he is the brand itself. According to research, even a single tweet from Musk can move Tesla shares by 10%. Now think, when the market sees the man pulling out entirely, what does it do? It panic sells, and this panic creates a domino effect. When Tesla falls, the entire electric vehicle sector shakes because Tesla is both the locomotive and the reference point of the sector. What about SpaceX? SpaceX isn't a publicly traded company, so you won't see a direct impact on the stock market. But one of SpaceX's biggest clients is NASA, and the other is the US military. When Musk withdraws, the future of these contracts becomes uncertain, and that uncertainty spreads across the entire defense sector. Think about this too. SpaceX is currently operating the world's largest satellite internet infrastructure with Starlink, active in more than 150 countries with over 7 million users. When Musk leaves, who takes over the management of this infrastructure? This isn't a small technical detail. It's an existential question for the governments, militaries, and millions of users dependent on that infrastructure. Now let's look at the $800 billion itself, because this part is genuinely strange. Converting $800 billion to cash sounds simple, but it isn't. When someone who owns 15% of Tesla shares starts selling, the market sees it immediately and the share price starts falling. So, the more you sell, the less value you lose. And the less value you lose, the less cash you get. Economists call this a liquidity trap. Big players erode their own prices with their own selling. So when we say $800 billion, we're really saying currently $800 billion on paper. The real cash would be far less. But let's say he did it. He got $600 billion in cash and didn't invest it anywhere. This money has effectively been withdrawn from the world economy. And this figure is not small. It's close to Italy's entire annual export volume. Withdrawing this much money from the market creates a serious investment gap, especially in tech. Startups can't get funded, the pace of innovation slows down, and years pass while rival companies try to fill the void. What do competitors do? At first glance, they look like winners. When Tesla falls, Volkswagen, GM, and BYD rise. When SpaceX weakens, Blue Origin and Rocket Lab make headlines. But the inside of the story is a bit more complicated, because the vast majority of these companies spent years improving themselves under the competitive pressure Musk created. When that pressure disappears, what happens to the pace of innovation? History shows us that the absence of a meteor competitor relaxes the sector, but also slows it down, so everything gets harder. Now let's get to perhaps the most interesting question. Where does the $600 billion go? If Musk keeps the money on the sidelines, it's a loss for the world economy. But what if he decides to spend or donate it? Bill Gates is known for pouring his wealth into philanthropy. If Musk chose the same path, and this time he really could because he has no company responsibilities left, $600 billion could go toward climate change, health research, or education. With that figure, the entire electrical infrastructure of the African continent could be built. Surprising, isn't it? But it's been calculated. It's possible. But whether Musk would actually do this is an entirely different question. In conclusion, Elon Musk withdrawing from the market isn't just one man's retirement. It means a collapse in Tesla shares, uncertainty in the space sector, a management crisis at Starlink, an investment gap in tech, and short-term relief, but long-term slowdown for competitors. The system doesn't collapse, but it shakes. Because in the modern economy, some names are no longer just human. They are also an infrastructure. And when you remove the infrastructure, what's left? To answer that question, we'll need to wait a few years.
Thank you for watching so far. Subscribe for more.